Hey, what's going on, everybody? Good morning. Wednesday, 6 a.m., March 4th, and Bitcoin prices are currently at 87.39, as you can see. All right. The big news this morning, folks, is that India lifts its crypto ban on the exchanges that are there. Okay. This is, in my opinion, a very positive and healthy step in the right direction for Bitcoin and crypto, because with the 1.2 billion people and obviously Asia's second or third largest economy, India has a lot to bring. Whether it's in terms of talent or numbers or money. So I would say this is definitely a big positive sign. Now, does that mean anything in terms of price? Well, we could look at it a couple different ways. Okay. When I see a news article pop up like this, all right, especially in a market that's actively traded, the first thought that kind of goes to my head is, well, number one, it's a great thing that happened, but number two, what is the intention behind a sweeping style of news like that? Is it trying to cause an inflation in price, move the price up or down? There's many different factors that sort of can impact the price, right? So if you guys remember in October right here, right, this was China pump, as we call it. The Xi Jinping tweet, I think, was about, hey, we're going to use blockchain in the government, and something about Bitcoin, I think. And then this, huge sort of short squeeze happened. Okay. And again, I mean, it's very possible that that could happen here too. But again, you have to line that up with other technicals, right? What exactly are we doing in terms of price action right now that could maybe warrant that? So let's look at it a couple different ways, okay? So first things first, let me get it a little bit more of a clearer chart, okay? So first things first, if you look on the Cryptosomniac Twitter, okay, sometimes I post stuff on there, not very often, but I do here and there. I mentioned yesterday that this descending broadening wedge was being created. And if you're not familiar with descending broadening wedges, go to this website right here. It's called the pattern site. And you can look up all these different patterns and see what their success rates are, how they look, what kind of volume profile they should have, leading into the pattern, coming out of the pattern, etc. Okay. So, for the most part, I mean, what we're looking for, in the descending broadening wedge is price to come down into this extending kind of funnel. And usually right at the last top that you put in, you get a pullback and then a push out. Okay. So what I'm seeing right now is almost something similar to what I would expect in a descending broadening wedge. You have a top, a bottom, a top, a bottom, then another top, pullback, and then I'm hoping for a breakout. But again, that breakout, unless it happens, this doesn't mean anything. This could, just slide straight down for all we know, right? We have no idea how far it's going to go down. Okay. So, another thing that we also realize that is in this black box, which is something that I've mentioned to my Advantage members over and over again, is this black box has been holding very true as a pivot between, price moving as support right there, resistance right there, resistance right there, resistance, and now, coming into support and support again, right? Very pivotal in using this black box as a pivot area. And so you could see prices again coming into that black box again, all right? And typically what I like to see is if support is tested twice, okay? So if it's, like we did over here, the second retest, I want it to be a higher low, and then I want price to just take off. Okay, more often than not, when I like to see support tested, it's usually just one tap and just keep going. Okay, but the fact that if it's coming to that same area again, I want it to kind of just get a higher low. So this is your low. I want this to be your higher low, and then this to just keep on moving up. Okay, and once we break out of this descending trend line, as you can see right there, right? So let me see here. All right, why is this giving me trouble? Okay, 1 second. So if we measure out that line like that, stretch it out, right? If we go straight up, say over the next couple hours, we at least need to break above 88.30, maybe 88.50 or so, just to be safe. Okay, and that would sort of confirm that, hey, we may be breaking out of this descending broadening wedge. Okay, let me see here. On the 4 hour, right? Very ugly candle. I mean, there's nothing cute about it. This could be very much a bearish engulfing candle that kind of engulfs the last 12 hours of work. So you never want to see momentum being killed off just by a single candle like that. It just speaks on the overall bearishness. And this is why I'm still in this whole trend right here. I've taken more shorts than longs, okay? Because for the most part, right, here's the thing, you have this whole trend on your back, which is the multi-day trend. You have this consolidation on your back, and then once this range high was defended right here around, where is that? Right here around 89.65 or so, right? This is basically your, I guess, sort of your double top, if you will. And so, since then we've created a lower high, another lower high. So there's really not a whole lot of bullishness to talk about when it comes to this, right? It's very hard to argue that this could be, bullish, that this whole thing is happening. Now, I did state that if we start actually breaking up, right? And this is one thing people don't understand about trading, is that there are multiple steps from going from bearish to bullish, or from bullish to bearish. There's one level at a time that you have to look at. If price crosses this level, I'm slightly more bullish, and if it crosses that level, I'm even more bullish, right? So it's kind of like that. So the first thing that you have to look at is, in this whole range right here, you could see this thing on the left. This is what we call a volume profile for fixed range. Fixed range meaning it's from this area right here all the way to the end. Okay, so that's why it's the fixed range. Okay, so in this fixed range volume profile, a majority of the volume has taken place right up here, basically under where we are right now. And this red line, we call it the POC, which is the point of control. Okay, point of control basically states that above this area right here, if you can drag price above this area, above the red line, you're bullish, because you're above the POC. If you're under the POC, you're bearish. That means the bears are able to control this high volume area, that traffic area, and then push the price down. Okay. Now, one thing I like about this POC is that it's actually been sort of tightening up. If you can see, it's gone all the way to that high, and now this low, and now only come up this high, and now it's only coming up this low. Okay, so it looks like we're really tightening up on this POC. Okay, now I don't know which way it's going to break. What I can say is that there's a few positive signs. Number one, we created this base right here, this higher low. Okay, so that's your first positive sign. So we got a higher low, right? One can also make the argument that we are in potentially either a wave 2 or start of a wave 3. So this is the end of the corrective countdown here. This could be your 1. This could be your 2. We could be in the middle of 3. Okay, so the 3 could stretch, maybe up here. 4 could be over here, and then 5 could, be way up here around 9.5, 9.6 or something. Okay, so that's very possible, right? Alternatively, we could also be, let me see, I guess we could just be in a larger, 5-wave correction. So it could be like 1, 2. This could be your 3. This 4 doesn't make sense because it overlaps into the 1. But it could be an A, B, C, D, E then, So typically, so maybe it could be like this actually. This could be your A, your B, your C. No, even that doesn't make sense, because then you have this thing right here. I don't know, definitely a complex count going on in here. I don't know what to make of it, to be honest, but I like the fact that it's coming back into this black box. As long as it doesn't put in a lower low right here as per this swing low, I think we should be okay. All right. And what I mean by that is I think we should be okay in terms of creating a bottom here and trying to attempt to push back up, okay? And it doesn't mean that, if we push back up, we have to go up here, okay? For all I know, the bears could essentially be waiting again right here around 89.69, defend this area, and then torch this thing down, okay? It's very possible that, you get sort of a triple top like that and then get price just sent down. You'll never know exactly when these patterns are going to break up or down. Okay, they have certain statistics behind it. Even Bukowski will talk about average rise and decline percentages. He'll talk about the overall performance of the pattern itself. He'll talk about the chart pattern acts as a reversal of the prevailing price trend. 58% of the time, right? So that means that in this pattern right here that you see, which is this descending broadening wedge, it breaks to the upside 58% of the time, okay, if it does something like this. So, I mean, that's a pretty decent statistic, right? There's never, 90% or 100% in trading, okay? That's just not how it works. And for those of you who are expecting like a higher level of certainty or a guarantee, not going to happen, folks. It's just not. I don't know what to tell you. That's just not the reality of trading, and you kind of have to get used to that. And actually, the thing is, the sooner you get used to that, the sooner you realize that the fact of the matter is, a majority of trading itself, you have really no control over. Okay, and it's sometimes almost liberating when you realize, like, okay, I just have no control over price. I need to stop thinking of the future and trying to predict the future of how price is going to do and where it's going to go. My job is to look at the technicals and figure out, what are the chances that this could be a bottom? What are the chances that this thing breaks out? How tight can my stop be, or how wide can my stop be? What is the overall trend looking at? And then based on those factors, then we start weighing our options of going long or short. That's the best you could do, folks. Manage your risk, set your stops, worry about 4-hour, daily, weekly, these kinds of time frames, and then you could pull the trigger on a trade. That's it. That's all you have under your control. What you don't have under your control is what is going to happen to price an hour from now, a day from now, a week from now, or a month from now. Okay, you have no idea what price is going to do. You have no idea, just like people didn't have any idea about what was happening in the stock market, right? Last week, the stock market got crushed because overall it was already overextended, and this coronavirus thing really sort of accelerated that drop off, because it really started to impede on supply chain of different companies, and that got priced into the stock market in many companies. And so you can see a 15% decline in the S&P 500, right? And even now, even yesterday, it doesn't look like it was recovering that well. Same thing with crypto, right? Definitely doesn't look like it's recovering, that well. Okay, maybe it's creating a bottom here, or maybe this is redistribution before another sell-off, right? So again, it's all about weighing, the probabilities and the possibilities of price, managing your risk, and then pulling a trigger on a trade. Okay. So, but again, the fundamental news I think is positive. I do also think it's positive that we're creating this descending broadening wedge. I do also think it's positive that we've created a large, 3-4 day sort of this base right here potentially that kind of looks like an inverse head and shoulders, which again is a potential bottoming reversal pattern. Okay, doesn't mean it's going to break up all the way to 10,000. You could very well just give us a little quick wick over here and then come back down. It might even smash all the way up to 9,500 and then come back down. You never know. Okay, but what we need to do is look at the technicals and figure out, okay, well, how high can it go based on the pattern itself, based on the other SR levels that are around it, right? So with that being said, the key SR levels around BTC right now, first one being, this base right here. Okay, this base right here that got broken by this sell-off right here, that's your first target, and that's around 9,100. Okay. Don't quote me on the exact price, but generally that's the area that I'm looking forward to. Okay, so 9,100 is the area that could be the first target out of this breakout. Okay, now I stated yesterday in a video to my Advantage members that if we get past the first X right here, chances are we'll get past multiple X's. At the very least, we might get to 9,500. And at the very most, we could get all the way up to about 10,100 or 10,300. Okay. Now, once we get past 10,300 though, which is, say this wick high, I would say we're pretty much in the clear all the way up to 10.5, 10.6. Okay. But again, there's a lot of work to be done till then, right? You have to clear one level at a time. These X's denote that there are stops sitting for short positions. That means once you squeeze out the first position, the next one is in peril too. Usually when you squeeze out people from the first area where there's short stops remaining, those people basically have to cover, meaning they have to buy opposite long on the other side, which then further, once you break past that first X, which then further accelerates price. And then once the next X breaks, then that further accelerates price because they have to short cover, okay? So understanding these things, folks, and how those operate in the overall context of price action, this is something that I teach in the Cryptosomniac community, okay? If you want, come join the Cryptosomniac Advantage membership right here, products page, $97 per month, folks. I think that's a steal, especially with the amount of information that I provide. Every day I do 2 videos. As you can see right here, this is our evening analysis right there, okay? And then multiple updates through the day to show you exactly what I'm thinking, what I'm looking at. And again, these kinds of morning analysis, I don't do these YouTube videos public that much anymore. Why? Because people are just ungrateful. They want more and more free stuff, right? You got to get with the fact of life, which is that, nothing in life is free, okay? Especially if things are worth it and they're helping you grow and making you money. Those are definitely not free, and more often than not, they're very expensive because it's a unique skill set that's helping you, maybe build some supplemental income, maybe pay for extra bills, maybe pay for vacations, maybe, help you get a job that, you can work remotely. This is a very unique skill set that, in my opinion, does warrant a payment, especially, in my opinion, like I said, higher than $97 per month, but I do it for 97 because I think it's a good price to teach people the value of education. It's not too cheap where people don't respect it, but it's also not too expensive where people think that, oh man, this is way too much for, my level of time and attention that I'm giving, So I think it's just a sweet price, all right? So anyway, with that being said, all right, S&P 500 dropped quite a bit, right? The overall health of most markets is really not looking that good. Even BTC, we need to see if this black box hold, right? If it doesn't, then we're just gonna put in a lower low as per this swing right here. We're probably gonna go down to the 8.5 level. And that's not gonna be pretty, to be honest. It's really not. Because if we keep hammering this 8.5 level right here, chances are pretty high that we're gonna go, towards these blue markers down here. Okay, this is where the key SR level is. $8,200. Okay, resting liquidity right here, as well as a lot of confluence, whether it's fibs, whether it comes from this previous November key consolidation. So a lot of stuff goes into these key SR levels, and they're created for a certain reason. When you see price hit this as resistance, come back around and test that support, that means there's major players getting involved at that particular level. Same thing with $7,600, $7,700 right there. Okay, so we'll have to see exactly how this box holds. If not, I guess we're just gonna go lower. Let's see here. XO looks all right. We had 44 million right there, negative delta, definitely reduced quite a bit in the last 1 hour candle. And then the current 1 hour candle also is not as high as the negative delta right there. So that's, to me, a positive sign. Okay, typically, what you want to see is negative delta kind of dropping off and then positive delta increasing. That signifies that price could be bottoming and turning around like that. okay, because there's some absorption going on. There are players stepping in, picking up some long positions, okay? That's how I'd like to see that, all right? But other than that, folks, I think that's pretty much it. I hope you guys enjoy this analysis. Again, come join Cryptosomniac, and hope you guys come join. All right, cheers.